Hi everyone, it's Mark here at TSLA, and Tesla had a really good day today, closing at $257.18. That was a share price increase of $18.36. In percentage terms, 7.69%. So this comes off the back of really bad JOLTS job openings data, with job openings falling quite a bit compared to expectations, something probably no one really expected, but I have some commentary about that in a couple minutes. Tesla's overall price action looked a little better than the market, so that's really good. Not just in percentage terms, but just the overall higher highs on certain time frames where there's some consolidation or sell-offs into the end of the day for certain tickers. So this is Tesla's on the 15 minute, and we can see Tesla is well above our calculated upper EM. EMs could vary depending on when they were calculated and some other parameters, but generally it was anywhere from $249 to $250 for this week's estimated move to the upside. Now we are considerably higher than that, and sometimes it does revert to the upper EM at the very least, coming under it by the end of the week. And we have 3 more trading days to kind of clean up 3.5% if necessary. And it also depends on how options really evolve over today and tomorrow. And so things can be positioned in a way where the market makers don't really need something to come underneath the EM to not lose too much money. But we'll just have to keep an eye out for that and be conscious that the move was so quick in the first 2 days of trading. I know yesterday wasn't really much of a move, but it was so quick that there wasn't much profit taking on Tesla. So does that happen sometime this week? Is there a de-risk by Thursday so you're not exposed to Tesla too much for the inflation's data? And so we'll talk about what we want to do with the stock later on in the video. But no, we're about 3.5% above the estimated move. And before we go to the news and to Twitter posts talking about today's stuff, we'll just look at a comparison to some mega cap names. You can kind of see what I'm talking about. Orange line being Tesla, and the candles being Apple, and the rest of these colors are the other mega cap names. But you're seeing how Tesla kind of outperformed for the day pretty severely, so that's really, really good. You can kind of see how there's no real notable lows being made. The pullbacks were kind of smaller, and there's more buying at the end of the day compared to, let's say, Apple, who sold off a bit, Nvidia, who had a larger pullback at the last hour or so. So that's a good look for Tesla. I know Tesla's selling off about $1 after hours, but no, $1 after hours on an $18 day move, maybe that's not a big deal. It's maybe people coming home wanting to take some chips off the table, so they may be selling a couple shares in the after hours to reduce exposure or take some gains if they were swing trading. But let's switch over to the browser, and we'll take a look at some news. So the first things first is going to be, of course, the JOLTS data. So the JOLTS data was a surprise to many, and or maybe not too many, but it was a surprise to most people, like to see job openings contract in such a large percentage, basically a miss of some, 600,000 jobs, and that's kind of coupled with the revision. So the article from FX Street says the number of job openings in the last business day of July stood at 8.82 million. That's information from the BLS. It's reported in its job openings and labor turnover survey that was released today on Tuesday. This reading followed 9.16 million, revised from 9.58 million for the numbers that came in last month. So not only was the job openings contracting at a very large percentage based from expectation, but even the numbers that were reported last week that were relatively in line, essentially that was a big miss as well. We're talking 400,000 jobs that missed in June. So overall, we're talking about millions and millions of opportunities or open jobs being taken away from people potentially looking for maybe a new job or maybe like an upgrade as far as like pay goes. According to CME Group Fed Watch tool, markets are currently pricing in a 43% probability of the Federal Reserve raising the policy rate by 25 basis points before the end of the year, and that's compared to 47%, just yesterday, and yields are down too. We'll take a look at yields in the charts when we switch back to TradingView. So there is a kind of a consensus that in September, in the FOMC meeting, that there's not going to be a hike. It would just be another pause. And that, of course, could change if Thursday's inflation data is out of whack completely from expectation. I think Powell was expecting like 4.3 on core year over year, and the market is kind of coming to a consensus around 4.2 on the core PCE. But yeah, so it would be good as the probability of odds of another hike in November go down. That's essentially saying, this could be some breathing room for stocks that are really rate dependent, and it also signals to the market that potentially cuts to the overall interest rate can come down, can come sooner, and that's actually what's being priced in, with some bets coming, bringing that first cut in closer to 1 month, which would be June of next year, for the first cut, and that's unless we fall into an unexpected recession or something like that. On Twitter, Liz Ann Saunders, who's a good read every now and then if you guys are looking just for some macro and economic data. Liz Ann says, over the past 3 months, 2.55 million job openings have been shed, which is the largest 3-month decline on record. And calculation correction, over the past 3 months, 1.493 million jobs have been shed, which is the largest decline on record. Now, of course, the other declines kind of coincided with, of course, COVID and some other kind of recessions. So it's kind of surprising how our GDP expectations are pretty high, and GDP being the kind of the calculation, or being a major part of the calculation for an economy falling into a recession. Typically, the loss of jobs in this amount over a very short period of time basically either signals a contraction or shows you're in the middle of a recession. But the possibility is we could have had a recession already, right? There was a time last year where we had 2 GDPs which printed negative, and people were talking about, oh, we're in a recession, but they kept saying, oh, jobs are really, the job market is really tight and unemployment is really low, so that's not a recession. However you want to spin it, it's possible that we already had a recession, or that the recession could be coming because of this drop in job openings, which kind of coincides with all these red areas, which signal previous recessions that coincided with loss of job openings. Another bit of news is more Tesla related, and it's going to be Nishta coming out. Well, this is really a month old, but they just uploaded the letter in regards to their concern about Tesla's autopilot safety. Maybe this is kind of a sensationalized bit of news, but it is Tesla relevant, and it's just another piece of data or of news that could kind of stymie Tesla's rally. And I don't know, I don't think personally, from following the stock for a long time, that a little bit of news like this can affect Tesla, but it is kind of like being compounded with the upcoming trials in September over autopilot, and there's some other there's 2 trials about autopilot or the full self-driving beta. Now, those things can actually be good catalysts, because if Tesla wins those cases, it would be really difficult to bring much more similar cases in the future against Tesla. So it could just be an opportunity to nip those in the bud now, get them out of the way. So when we go to full release on full self-driving, when we go to bigger adoption for people using autopilot, enhanced autopilot, that these kind of frivolous claims could be, they can probably be persuaded not to file charges by their attorneys or what have you. So Nishta sent a letter last month, the 26th of July, to Tesla about the autopilot system not prompting the driver to place their hands on the wheel, kind of that, applying torque to the wheel to signal that they're still paying attention to what's going on around them. So Tesla's already responded to this. It's been a month already, so you don't see the response that Tesla sends, but this doesn't really seem like a big issue. This seems like something that can be just updated through, some over-the-air update that kind of either increases the prompts to torque the wheel to signal that you're paying attention, or there's some other thing they can do. Maybe there was, an update that didn't go through that needs to go through, something that didn't patch well on a previous update, what have you. I don't think it's a big deal, but it's just something to keep in mind as we get closer to like the trials in September. There's a possibility that all this stuff coming together is going to be a cause of concern for people who are trading Tesla, and maybe they'll kind of get themselves out of that exposure, and that could affect stock price, because we know that September is pretty weak for the market. We talked about it yesterday, that September is like the only month of the year where there is more downside than upside since the past like 80, 100 years. Let's go over to Twitter again, and there's an interesting little look. I like Jerry Tesla. He has cool videos about full self-driving, and he kind of tests new patches really quickly, and so you can get a good idea of how new versions are performing. He said in a X post, Tesla responding well to positive reports of SSD beta on hardware 4 vehicles. So this is some news that came out yesterday where there was this a 6-month lag that Elon was talking about, where the hardware 4 vehicles could get access to the beta, and fortunately, that wasn't necessarily true. And for some vehicles, they're already receiving the latest full self-driving and getting access to it in the first place. So that's good for them. That's good for a lot of people. But what's really moving the stock is not this at all. And the reality is, the traders, fund managers, institutional investors, they don't care about this at all. They do not care about this. Like, there was great news about full self-driving version 12 from Friday. We talked about it yesterday, right? It didn't move the stock at all. All it did was create this kind of like pre-market pump that most likely was driven by retail investors trying to buy stock before they go to work, and only for it to be completely sold off into the negative by people who were really positioned heavily into Tesla, and probably some fund managers or traders. So what really gets Tesla going is rates, and getting some clarity on rates is all that matters to the market. If full self-driving version 12 came out full version now, not alpha, not beta, it was just a wide release and everyone that had full self-driving can use it, I wouldn't be surprised if the move that you see from that news dropping would be less than the move you saw today. Because you can get, yeah, sure, there's going to be a lot of people that could, buy the full self-driving subscription or just outright buy it. And then that's a lot of basically 100% profit for Tesla over the next quarter and for the rest of the time. But it doesn't necessarily fix the fact that there's a big barrier for people to buy new cars, which of course is interest rates. If interest rates come back down, then more people can buy cars, and thusly then more people can buy full self-driving, because full self-driving still costs money, and money is really tight for most people. Maybe not for you, but for a lot of people out there, there's a lot of people that are living really tight, paycheck to paycheck, or even worse, where they're running deficits. And you probably heard about this on the news. Credit card deposits, credit card balances are the highest in history, which makes sense. I think that's going to be just as time goes on with inflation and just inflation alone. It makes sense that balances would go up, but to go up into the quickest. The rate that the balances were being used were very, very quick earlier this year. And now we're seeing what? We're seeing people missing payments on cards, or you hear from credit cards issued by retail stores like, your Nordstroms or your Macy's, and people are just not paying. And these balances are over $1 trillion all combined. And they're at the highest interest rates in the history of credit card interest rates. I don't know, something like 29%. And that doesn't really bode well for the average consumer. So if rates were to come down because economic data is really bad, or if inflation is really, really, if inflation is getting lower, then that's what's going to drive really rate sensitive industries like the auto industry or the real estate industry. And Tesla being a part of the auto industry, that's what matters more so than great product turnout and what have you. You could release a bunch of new cars, but it doesn't really mean people can afford it, right? They need to be affordable. Like, we lived in decades of cheap money for a very long time. And so we kind of get confused maybe about, especially if you're a little bit better off than other people, what rates can really do when, like, before this rate interest hike cycle started, if things are already, relatively tight financially for your family. Now, I talked about how the JOLTS data took a lot of people by surprise and the market reaction was severe. I mean, to the point where there was gaps in very highly traded tickers. I mean, like, you would expect a gap in the morning, right? There were 2 gaps during the course of this day in not just Tesla or Nvidia, but also the SPY gapped up on certain portions of the day, which is really, really interesting. But I wanted you guys to take note of this spike here in the open interest chart on Tesla's options and the spike in the volume chart. Now, I was looking at this and there wasn't much red volume because, Tesla traders are typically bullish as their retail. And at the 250 strike on calls, this was a predominant spike in interest before the JOLTS data came out, basically like right near the open. The 250s were piling up pretty severely. And so either people were betting on JOLTS, but not many people use JOLTS as a way to, they don't bet on JOLTS. People bet on inflation, people will bet on earnings, but seeing large bets being placed early in the week to get 110,000 or more $250 calls on Tesla, well, that could be telling that people felt really good about the data that was going to drop, and it worked out really well for them. I think this is probably a 5 times at least as far as a return on a call purchased before the JOLTS data came out. I think this might be like $800, and when it was purchased at $190 or something like that. So that was a really good move. I bought a call before JOLTS came out, but I didn't buy it for this week, so it wasn't as volatile. I had a call, which is my upward side hedge. So of course, if I sell a call, for every call I sell, I buy a call. And the call that I bought, I think it went up like 1,600% today. And the call I bought for next Friday, which is going to be my hedge for the next call I'm going to sell, which might be tomorrow, might be Thursday. But Thursday is going to be tough because inflation comes out, before the market opens. So I don't know, maybe tomorrow. If I sell a call tomorrow, that's going to be my hedge for that call. I'll have that call sold maybe for a week or 2 after expiration from next Friday. So I want it to be a little bit more volatile, like we talk about. So if the call I sell is a month out, maybe my upside hedge will be for an expiration within 1 to 2 weeks to help pay for any type of upwards movement that is going to be well above the strike price for the call I sold. So I just wanted to point this out, that if you watch this pretty regularly, or you just watch your options chain on your brokerage, and you're seeing a lot of interest come in at a certain strike, especially before some type of economic data is about to drop, it could be a clue for you. And so watch both sides, watch puts, watch calls, and that'll help you make a decision about, where's the market? What is the market looking like? Are they looking pretty long? Well, it looked really long this morning, which was one of the reasons I bought my call for next Friday. And it was only a really small call, guys. It's like $40 call, and not $4,000, but I mean like a 40-cent call. But I always want to have that upside insurance in case things get out of hand on a covered call that I sell. Okay, let's go back to the charts though. And I talked about how Tesla is only going to move on some type of news on rates. So let's look at the rates. Let's look at the 2-year yield, and you can see it was a very steep drop on the 2-year yield. We're looking at a drop of what, 4 point something percent. I mean, let's take a look at where it fell, how much it fell. So at 3.3%. So it fell 3.3%. And that was, the intraday, not the intraday high, but the high from the close from yesterday to today. It's about 3%. And looking at the 10-year, we were hoping for a head and shoulders pattern on the 10-year, and that played out really, really well. So yeah, head and shoulders on the 10-year. And it dropped 1% or so. Let's see. From its high to the low. Oh no, this is actually a big drop. So it dropped considerably. It dropped like 3% as well. So okay, good for that. Good for the 10-year. That's really good for stocks. Like these really, really sharp drops are really, really good for stocks. So you might ask me, is there going to be any more upside for tomorrow? Now, we don't know how the market's going to process Tesla news with Initiative. I think it's a nothing burger personally. But as far as what are potential is for some upside, well, I would like to think that looking at the VIX usually closes its gaps. I think it always does. And it's looking like we can get a close on the VIX. If we can see the VIX come in at around 13, 90 something, which would be a drop from the close. That would be a 3.5% drop for the VIX, and that would be very similar to the drop in VIX from today. The VIX dropped about 4% today. So that can close its gap, and it can set you up for some volatile movements on PCE. Like, let's say this settles on closing the gap tomorrow, and by PCE, it can have that opportunity to bounce or even sell off even more. We'll see, right? But closing the gap would be good for stocks. It could be good for Tesla, for volatility to come in. Maybe not so great for selling calls, but I think if Tesla goes up tomorrow, it can still be pretty worthwhile to sell a call. Even if it opens a little bit green, I'm probably going to take an early opportunity to sell a call if it's green sometime during the morning, because I wonder if it will start getting sold off during the course of the afternoon. Something to be aware of if you're positioned into Tesla. Maybe try to look out for signs of weakness when it comes to like 10:30, 11 a.m. Tomorrow. So a gap close on the VIX, we can send Tesla higher. If yields continue to come in, Tesla can go higher. So those are the two things to watch. I'd watch the VIX tomorrow. I'd watch the yields, and you can watch these before the market opens as well. And the yields are a better clue to the potential upside or downside than watching Tesla's pre-market action. Because I think we proved it to ourselves. When it gaps up really hard, it likes to sell off really, really well. And that's not really, really good. We're looking at a head and shoulders in the S&P 500, but a lot of people are thinking that this is just not a thing anymore. And because you kind of wanted the head and shoulders to have some equal level to the previous shoulder. And that's where I kind of drew this pink line. And the reason I drew that pink line there is because I felt like this is a really good area for the head and shoulders to form. And it kind of did respect this for a while. This is the hourly chart. For a couple hours, it was really respecting this level and giving the opportunity for the head and shoulders to play out if the market wanted it to. But it didn't work out. It definitely closed above it, well above it. It got bought up severely throughout the day. Little to no pullbacks, like every other ticker. Upside, I think the short-term upside is around $452 on the SPY. Kind of puts you in this level. A gap close would be incredibly bullish, and there's no way a gap closes unless PCE comes in really, really well, in my opinion. So what would that move look like, though? So we can get some numbers in our head to prepare ourselves for tomorrow. Like if you're watching the S&P 500 and you see like a 0.6% move, I think you need to call it there. I think that's going to be a good gain for you. Not financial advice, but it kind of gives you a gauge for the overall market. So if you're seeing resistance at around 0.5% up from yesterday's close, or from today's close, maybe that's where you want to take it, because a gap fill or getting to the bottom of the gap, what would that be? Bottom of the gap would be a 1% move, and gap fill would be like 1.6%. So I don't think we get that unless something crazy happens tomorrow, and something crazy already happened today. So I wouldn't be surprised you get some resistance early in the morning after a little bit of green. Maybe that's your opportunity to go short for a short period of time on any ticker that you have, Tesla, this S&P 500. It wouldn't hurt to get a hedge in for this Thursday. So if you see some good buying in the open on Wednesday, maybe that's your opportunity to buy a cheap hedge for Friday, especially for Tesla. If you're really, really heavy into Tesla, it helps to be hedged until you have a lot more assuredness and clarity of what the company's doing, what rates are doing, and stuff like that. Let's look at a smaller time frame on Tesla. And you can kind of see how it looked very, very bullish for very long amounts of time, where you had very typical, what is this action? So in the morning, you're seeing just bull flag. These are pretty textbook bull flags. And it was really interesting. This is our upper EM, which is around 248.90 or something like that. And you can see how there's these gaps in the price where it just moved up so violently and quickly that the orders were just getting filled, and you got basically almost gapped through the EM. And maybe that's the type of move you need to get through some type of resistance like that. And it just went above 250 pretty easily. After a couple of minutes of resistance, maybe 3 or 4 minutes, and it broke through. It got through 250, and people kind of wonder, like, where does it stop? Because I told you guys before, like $5 increments on Tesla, those are really good opportunities to start taking some chips off the table. It got through 250 pretty quick. It sold off very slightly, like, what is this sell off from 250? So it sold off 1%, and it bounced. It kept bouncing off the upper EM, and that's a really good sign for the bullishness for the rest of the day. Like, if you know that most options are priced for a max move for the week of $249 for Tesla, and it got above it really quick, it broke above even a more psychological level of 250. It sold off, into the little profit taking, because that was a really big move from earlier in the day. Look how large this move was already, from, let's say, a local low to 250. That was already a 5.6% move. So there's profit taking, but it bounced off the upper EM, and I think at that point you can kind of be assured that that's your probable low for the day, because it's just flagging into higher pricing the rest of the day. And it didn't sell off on the last couple of minutes, which is really a really good sign, because like I mentioned before, we saw it in Apple's chart. Apple had a pretty healthy sell-off into the close. Tesla's close is a lot better. I know that after hours there's a little bit of selling. That could be the initiative thing, and it could just be people, like I said, taking profits. And it was a really good outperformance to the rest of the index, especially the tech index here in the here's the NASDAQ. So the NASDAQ really had a good day. Let's show it on the minute. And the NASDAQ had a pretty good form, better than some other tickers, kind of just flagging the rest of the day. And it also had a little gap, just like the S&P 500, just like Tesla did. This was a really interesting gap on a lot of charts. These things are pretty liquid, so that's kind of surprising. And it had a better close than some other tickers. So it had a good day. The QQQs had a good day, but Tesla had a much better day. So you think that with a beta of like 1.8, maybe you get Tesla at like 3.6%, but Tesla doubled that up, 7.6% on the day. Let's compare Tesla to the rest of the industry that they're in, and that's going to be the auto industry. If you believe Tesla is an auto manufacturer, here's some stocks you can compare its performance to. Of course, I always say that if there's bullishness in the market, Rivian's going to outperform Tesla, and Rivian did. It was a pretty solid outperform, and I always say that all the time. If you think Tesla's going to go up, not because Tesla released a car, but overall because of the macroeconomic conditions, Rivian's always your better play, because it's just going to move much more than Tesla is. But Tesla still outperform the rest of the auto manufacturers. So who are these manufacturers? So the candles are BYD, and there's yellow for GM and purple for Ford, and they all perform kind of like BYD. The kind of pure EV plays of Rivian and Tesla, it was a great outperformance, and it was very similar to like Nvidia's action as well. Nvidia had an amazing day, closing at an all-time high. Good for the AI movement. So if you believe Tesla's an AI stock, well, maybe we can overlay Tesla and onto Nvidia and see that they move very similarly today. But Tesla did outperform, obviously, because Nvidia was only up by 4%, was it today? 4.16%. Tesla was up 7.6%, and Tesla's had higher highs throughout the day, where actually Nvidia was flat and consolidating for the majority of the day. For about 4 hours, it was kind of flat. And Tesla's pullback was met with more buying, making a new high for the close. Nvidia didn't make an equal high on the close. Nvidia had some news where it's like, they're working with Google on a new product. That's great. Google's having a really good day today too, making, I think, a 52-week high on Google. But overall, pretty good day for the market. And there's potential upside if we can get the VIX to come down a little bit more. And hopefully the news about all this autopilot legal stuff doesn't drag Tesla all too much. But Tesla's been up for a couple days in a row, even though some of those days, one of those days wasn't too spectacular. It's still green. Is it due for a pullback? I would say it's possible if it opens green tomorrow. You can see a pullback. If it opens flat tomorrow and it goes green, I think you can still see a pullback into the end of the day. And that pullback can start early, maybe midday, and then start selling slowly into inflation, which is on Thursday. So looking at Tesla, it pretty much is above all our lines, right? So all the lines we thought it would stop at, it made some brief, holds at all those points. And these small flags or consolidations are just happening basically at strike points. This is happening at the $42.50 strike point. This is happening at the 45, and of course 450 just got gapped through, and it settled on the EM and bounced up. Looking at the chart on a slightly longer time frame, you can kind of see like where the interest kind of lies, and you can see from this immediately that we're at the bottom of the range. So this is the consolidation we had just after the earnings report. We tried to form a bottom, and we were talking about how this could have been maybe a spring over here to a wick-off reaccumulation. We thought this could also be a distribution once it basically didn't make a higher high, and we were right about that. But this area is probably relevant to us in the short term because it is the bottom of that gap. Well, not gap, sorry, bottom of that range. You can see how it got bought up over and over again. So what do people say? When something used to be support, it can serve as resistance. And so that SR flip basically could cause Tesla to consolidate or sell off a little bit here. And if it does, of course, you want to stay above the upper EM to maintain that bullishness. And also because going below the upper EM, that's a pretty big percentage drop for Tesla. But where do you want to base? You want to base above the other previous range that it got through pretty easily. So you kind of want to see it kind of not go below that area, the 255, 256. I'm sorry, not 255, 251, 252 area. That's probably where you want to see what was resistance now become support. And it's so staying in that area kind of makes sense to set it up for whatever move is going to happen on Thursday. And sometimes those moves aren't that great anyways, but we'll see. Yeah, so I think that this could be a good area for it to reject from tomorrow. How does that play out? It depends. I would say if I was like the market, I'd of course want to open either flat or a little bit green and have it bought up to before 260 and then show a really sharp rejection off 260. Like that makes sense to me. So let's say tomorrow it opens up and it opens up kind of flat. Let's say it opens up flat and it then gets bought up a little bit for an hour or two, and then before it even hits 260, it just kind of sells off like that. I don't know how much it would, if it sells off, I don't know how much, but like I said, I want it to come off the yellow line at the worst case scenario. At the worst case scenario, I want it to come off the yellow line. I don't want a bigger pullback than that. And if it does get below that, yeah, like I said though, I hope to see a little bit of green, sell some calls, maybe get some hedges in around the 259 mark if we can get to 259, because I fear 260 will just send this thing selling really, really quick. Ironically, if it opens gapped above 260 tomorrow, which would only be like a 1% something move, just be careful. We know what happens. They can sell very, very fast, but you can kind of gauge out in the first couple candles. But just be quick. Like if it gaps up tomorrow for whatever reason, you could just be really quick if you need to get a hedge in, because if you're unhedged, I know some people were unhedged going into this week, right? Because they felt like the pullback was enough, right? We had a 30% pullback. We're due for some upside, even more so upside. We had 7% last week. We have 7% again today. Is that all we get for this week? It's very possible. A 7% move in a week is huge, and something that on Friday we might be really happy about, depending on whatever data comes out. So if it's like I said, if it's up tomorrow, I'm getting my hedge in, maybe buying a put, depending how cheap they are. If it sells off in the end of the day, we can say that we expected that. And if it settles around 250, 251, 252, if you're really bullish on Tesla, like you can understand like maybe that's the local bottom for that day. And if you need to go long, is it an opportunity at that point? Maybe so. But what's really cool is that our island reversal that we circled here still played out. Our ascending triangle played out in a severe way. It was an explosive move. Now, these moves are typically very explosive, and I was actually factoring in a very small move for today. It's like maybe a couple bucks, and this was amazing. I don't think anyone was really expecting it other than the people buying those $250 calls on Tesla. Whoever they are, they're probably very, very happy because the move was really clean. Like you never felt threatened to take some chips off the table if you were in Tesla. Like it just felt like it would always go, and it was going. Whereas other names were consolidating, like Nvidia was consolidating for hours, not knowing what you want to do with that name for that long can make you get out of the trade really early. And Tesla didn't really do that to you. So you can thank Tesla for really good action You can kind of compare that to the S&P 500. S&P 500 had a really good action too. Yeah, that was pretty good. So it looks like the QQQ. It's just Nvidia that had more of that flat trade for the mega cap names, and Apple had that sell off at the end of the day after a flat trade for 2 hours. So I would say Tesla was did a really good job for us, and we really needed it, because let's just kind of give a frame of reference here. So on July 19th, when we were at $299 about, we are down 13.9%, 14% from that time. In the last, 4 days or so, we went up 21%, let's say. So we can be happy with that, right? This is 11 trading days, but you know what I mean. We had a couple good days, maybe 4 good days, but we're still up 21% from our island reversal low, and we're only 14% away from equaling a high. Do I think we're going to equal a high? Like, I'm not saying we are. Obviously, if there's some bullishness, filling the gap this week would be a very tall order. If you want to get another hedge in, 280, then 270, 265, 260. So basically, I like the $5 increments, and you can kind of see how it plays out here, that they form pretty strong supports or resistance. Here's the 270, that's 280, yeah, 265. So it all kind of makes sense. So watch the $5 increments. If you see green tomorrow, take some chips off the table if you want to, and get some hedges in. But otherwise, fantastic day. And beside the fact that jobs are contracting, that just helps put a cap on these interest rate hikes. And that's what really matters for Tesla. You just got to realize, imagine the demand of Tesla cars. If interest rates for a new car aren't 8-9% on a 80-month term, imagine if you can get the same car on a 5-year term at 4 or 5% instead of double that percentage-wise. So just know what matters are yields. Watch the yields. They can help you understand the move that's about to come, or it can validate the move that you're seeing. So if you see bullishness of Tesla pre-market, but you're seeing yields positive, that's gonna sell off, right? But if you see bullishness of Tesla pre-market and the yields are coming down, VIX is coming down, those could be good signs that the move that you're looking at could be more of a sustained move. And we know Tesla is one of the most shorted large mega cap stocks. It was almost 3% as far as short interest. So they have to be closing their shorts at some time. Maybe they held their short throughout the day thinking there's going to be a pullback. There is not a pullback, and some bullishness tomorrow morning could scare them out of their short, get a little bit more of a short squeeze going on. Maybe we see good numbers tomorrow. But let's not guess too much and just prepare ourselves of getting in hedges if we need to get hedged, and going long at the times that make sense to go long. Because this could be, if inflation comes in really, really good, the moment you want to get your long in might be tomorrow, right? Because you're not going to get it in 8:30 a.m. before market hours tomorrow if inflation comes in really, really good. Who knows if it is? Don't need to gamble if you don't want to, because like I said all the time, if you're holding shares of Tesla, you're already long. It's very, very volatile. You can see a 7.7% move today. That in itself is like an option return. Okay, so we don't have to go too long unless we're hedging for upside, because we're hedged with a cover call or cover calls, multiple cover calls. All right, guys, I think that's all for now. Thanks so much for listening, and have a wonderful night. Bye.